presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Phil in Puerto Rico. Hey, Phil, what's going on?
Hey, Tom, doing great. Just wanted to thank you guys and the whole crew. Best content on the internet. Really appreciate everything you guys are doing.
We appreciate you growling and prowling with us out here. Phil, how did you find us?
I just typed in live trading in YouTube one morning.
Cool.
I was looking for any type of live trading room. You guys came up, and
awesome.
I know quality when I see it, or at least I like to think so. And I mean, you guys are just a dream. I appreciate everything you guys do.
Welcome to the Tiger family. We appreciate you growling and prowling with us.
My pleasure.
Now, Tom O'Brien.
Welcome, folks. Good Friday afternoon. Tommy O'Brien coming to you live from TFNN. Thanks so much for tuning in, spending the final hour of the trading week right here with me. And we got quite an acceleration, folks. And we started off with the Dow. How about it? 50,000. Special number, right? Nice round number. Get your Dow 50,000 hat on. You talk about a run. From the April lows from 2023 at 32,000, the Dow was a laggard, and man, you're accelerating 50,106 right now. Dow up 1,100 points. Speaking of accelerations, we kicked the program off the Dow and the Russell. How about that? The Russell up by 3.5%, folks. Up 89 points at 2676 right now. We are still decently off those all-time highs, though, on the Russell, 2749. The NASDAQ right now, bumping up against all-time highs. And I say that, it looks like it, but the NASDAQ has moved so much. You're talking about almost 1,300 points from where we are. That's only 5%, though, from where we are. NASDAQ 100, you're up by 445 points. But check this out. You're up by 850 points from where we were last night. Remarkable. And the S&P's right now up by 1.7%, approaching 200 points off of the lows. 69.38 from 67.51. And how does a market push higher like that? Well, it's the usual culprits and then some, though. It's the Russell 2000 as well, but the biggest equities out there, NVIDIA, the biggest one of all, up by $13.38, up by 7.8%. And let's look at some of the volume in the markets, folks, and it's going to be a big day. Okay, NVIDIA, we've already done 172 million shares. The downward moves, we're about 200 million, and we're going to get a lot of volume in the final hour and on closing. NVIDIA, whew, up by 8% right now. We jump over to Amazon on their numbers. The flip side, down on them almost 8% on Amazon numbers. You take a look at the weekly. It's a disaster week, man. Amazon was already down dramatically coming into these numbers. So we were trading at 246 on Tuesday. You were at 196 last night. $50. Over a 20% pullback, folks, in what, 55 hours? 20% pullback in 55 hours. So Amazon came into those numbers down from 246 to 220. Okay, longer term, I like Amazon. But boy, the market's a little worried about spending $200 billion. And realistically, where's this thing going to find a bid? Just naturally, I mean, pretty remarkable if you go back to 2020 prices. But that's what this chart looks like right now. On a volume basis, February, we're 6 days in, folks. We're 6 days in, and we've done half the volume we did all of January. It's going to be a big month. That's your monthly. You jump over to weekly on Amazon, and yeah, just a mammoth number. You're going to take out everything we did in the last 90 days and then some with volume. 405 million on their earnings a season ago, and you're going to beat that number as we're right up against it coming into the close of an epic day to the downside for Amazon. All right, as I mentioned, now CapEx is going to be potentially a problem. You got Amazon, Google, Meta, all trading lower. But guess what? Who's making it up for it? Yeah, the places where they're going to be spending their chips, man. NVIDIA, Broadcom, Micron, AMD. Look at this. There haven't been many days where you're experiencing this type of bright green, folks. Okay, we're talking about 8% across the board right now. ASML up by 4.5. AMAT up by 6.3 right now. Some of the software stocks have been getting pummeled. AppLovin up by 7%. Jump over to Salesforce. How are they faring? No love for Salesforce, even a day like today. Watch out for this one, man. This one cannot find a bid. This thing looks like it's going back to Tesla lows at 126, man. You're breaking away with volume on Salesforce. There's going to be certain equities that are under more pressure than others, folks, and it looks like Salesforce might be the poster boy of software pressure from AI. All right, yeah, speaking of NVIDIA, I mean, it's just great that this gets said, and of course, you know, it's almost satire as in, what else would this gentleman say, right? NVIDIA thinks that Amazon spending $200 billion for CapEx is an appropriate and sustainable number. Well, who's spending? They're spending it on NVIDIA, right? AI has become useful and very capable. The adoption of it's incredibly high. Where's the cash flow behind it? That's all you want to focus on. And we're not there just yet, okay? But yeah, people are adopting it. But are they adopting it in terms of being able to support a CapEx on this perpetual of a basis? I was saying, this is not something like you build a factory, right? You don't build a Ford factory and pump out cars. So you put out $200 billion in the first few years, and then your capital's there, and you can expense that down as you get the life of that factory, right? That's not how it's going to work with data centers, man. Okay, we know the technology. You know, you're lucky you get a couple of years right now at the forefront of what's moving, 2, 3 years, 5 years. God bless you, right? Think about technology 5 years ago, folks. I got a desktop computer that's just staggering. It was top of the line. And they're telling me already that I'm pushing a Windows update that needs it, all this. So they are going to have to spend money on a perpetual basis, and they're going to have to make the income as well. Well, NVIDIA says that's okay. They'll be just fine. Yeah, we'll see where we go from there. But nonetheless, today, that's your weekly on NVIDIA, getting it all back in one day. As in the week's losses on one day, and yeah, we'll see if we can do it on volume. All right, Google shares out with their numbers Wednesday. It's a strong day yesterday, charging back, but today you give it back again, down by 2.6%. The market waking up to, hey, these numbers are just going to keep going up, man. And Meta off by 1.8% right now as well. So Snapchat Wednesday night just gets decimated. You're up by 2.1%. But boy, you want to talk about a tough-looking chart, man. You know, you had some action back here in September, but that action's long gone right now, man. That's your weekly. I wouldn't be touching this thing, folks. What are we talking about for market cap now? Still a $9 billion company. Wow. Pandemic darling to nothing. Geez, what were you approaching there? $150, $160 billion? You're at $9 billion at a $5 equity? My goodness, Snapchat. You know, it's enticing to look at this area and say maybe you're going to come back up and test $8, and maybe you are, folks. But if you're getting into this equity, this thing could be going to zero. Only risk what you're willing to lose. All right, gold right now making a run for 5,000. You're at 49.77. We got silver at 77.14, and platinum right now 2,100. Stay tuned, folks. We're coming right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. And you read articles like this and I read headlines like this, and CNBC is borderline clickbait. Okay, I love Bloomberg. I love the Wall Street Journal, New York Times Business, all three of those top notch. NVIDIA, no, they'll give you the basics, okay? But it's headlines like this without any disclaimer. And what else would you expect, folks? The man running the richest company in the world that sells chips to CapEx AI companies is confident that the money those companies are spending with NVIDIA is sustainable. Now, the most remarkable part about this is that NVIDIA rises on their CEO saying that the money that people are spending is perfectly sustainable. Now, yes, okay, that's true. And Amazon spending $200 billion, the market's waking up to this. It's just going to be even bigger than we imagined, folks. Okay, some of the numbers you'll see out there, when you talk about Google spending $180 billion, that's the middle of their range. Their range is actually 175 to 185 billion. Meta, to back things up to last week, put it on a 10-day, very well received by the market. Okay, gangbuster numbers, even though they're spending remarkably. And just like that, we've traded from 744 to 659. So yeah, NVIDIA is going to do just fine. But what's going to happen to these companies? And guess what? It goes turn and turn. They're all interrelated. So NVIDIA pushing up that much and Meta down that much, they're all very related at this point. And if it was such an easy math scenario, here's the last part, okay? And this is just where you want your mind to go in the next months and years as this becomes something that has to get proven. Amazon's not going to be able to spend $200 billion in CapEx with some type of a return in the next 12 to 24 months, maximum, right? If not 3 or 6 months, really. That's giving them almost as much room as the market would ever give them. And if it was this easy to say, right, to the extent that people continue to pay for the AI and the AI companies are able to generate a profit from it, they're going to keep on doubling. Okay? If that was the case, folks, you would not have the circulatory nature if it was as obvious as a case. Let's put it this way, right? Because it could be the case, and people are still skeptical of the risk involved, and the players in the industry are already involved in that risk, so they're ramping things up. But if it were that easy you wouldn't have the circulatory deals going on where you have NVIDIA investing in OpenAI and OpenAI paying Oracle for compute with that investment, and then Oracle buying NVIDIA shares with the money that OpenAI is spending on Oracle cloud infrastructure. Okay, you wouldn't need it. Other investors would be battling to invest in OpenAI and in that circle. So there are really dramatic risks in this market when the market is very worried about the companies that are actually spending the money, right? Who has the money? The company's spending it do. Amazon's got the money, Meta's got the money, Google's got the money right now. NVIDIA only has the money because these companies are spending it. And if these companies are going down, that's worrisome in the longer term. But in the shorter term, it's great for NVIDIA because no matter what, Amazon's going to spend $200 billion on a build-up. All right, let's take a look at the metals market, see how we're trading with volume. Gold contract, 49.76. And yeah, I mean, look at this. Nothing compared to the week we had last week. That was quite a historic meltdown. $1,200. $1,200, folks. $1,203 almost. Right, was it? No, $1,203.60. My goodness. $1,203.60 in about 72 hours. Yeah, look at this volume again. No volume on this bounce, man. You want to see some real buyers in this market, folks. And I'm not even talking about you have to compete with the days when we were doing 500,000, 400,000. You want a real sign of strength. You want buyers stepping in. Okay, you just don't want sellers pausing. We're at 165,000 contracts on gold today, folks, and we're up $300 from the lows. That's a day that you'd normally get more volume. Gold is $300 up from its lows, and you've done 165,000 contracts. Be careful on this bounce, man. Okay, silver, not even comparing to the downward days. Yesterday on that trade lower, yeah, 160,000 contracts, and we're bouncing on 100. We'll see how we get for the final hour. We'll take a look at other metals. Platinum right now. All right, platinum's a little stronger. Look how the volume's comparing to yesterday. Platinum's up by 1.6% right now. We jump over to copper. And yeah, copper looks strong as well. See how the selling wasn't as pronounced on even these 2 days? You might bounce on more volume. We did 60,000 yesterday. We're at 53,000 right now. Take a look at the two copper stocks. Freeport-McMoRan up by 2.6%. All right, we want to see a little bit more buying there. No one really leaning into that equity today. You're only at about 13.6 million shares. Very light day. It's going to be the lightest volume day we've done almost all year on Freeport. Southern Copper, same thing. Look at this. Oof. That's not how you want to see a resounding bounce, folks. Southern Copper up by 5.5%. Take a look at some other equities. First Majestic up by 10% right now. Just speaks to the massive volume in this equity, that somehow that bar looks like 10%. And meanwhile, this thing just traded from 15 to 27 to 20. Look at the volume on today's bounce, though, folks. You're going back to the lowest volume days since January 8th. Jump over to a couple other equities. Wheaton Precious. Oh, be careful here, folks. Look at this volume on all these equities. Nothing. There's no volume on this buy in the equities, folks. Wheaton Precious. You know, what I keep saying, okay, is just get a plan. Because I talked to a bunch of tigers out there, tigresses. And you don't want to have to make that decision on the way down, folks. Because unless you're holding forever and you're risking it all, right, you don't want to be making that on the way down. Even on a weekly basis. Look at this bounce on lighter volume on Wheaton Precious. You jump over the 15-minute. Tremendous volume near the close yesterday. Okay, that was what? 800,000 contracts on Wheaton? Yeah, but even if you take out that entire 800,000 contracts, you're still at $7 million on the day way down. And you're at 1.3 on the pop today. That's like nothing, man. There's nothing behind that move. All right, we're not stopping, man. This market is just melting higher. S&P's up by 1.8%. How about that Russell, man? Russell's up 110 points. You're up almost 4% from where we were last night, up 3.5% right now. And look at the volume on a weekly basis. This is the second biggest volume week of the year so far. No, biggest volume week of the year. You're taking it out. You're doing it with volume. All right, folks, Russell up by 3.5%. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Russell 2000 up by 3.4% today, and let's jump over. We take a look at the Russell 2000, when you're talking about the heat map, and look at this thing, man. You know, on the day that the index is up 3.5%, you're going to have a lot of green, but it's almost across the board, folks. You're talking about 2,000, right? And my goodness, the industrials, everything, healthcare, even in the S&P 500, some of the healthcare stocks trading higher. Lilly up by 3.5% right now. Johnson & Johnson up by 1.2%. GE up by 5.3%. Tesla shares up by 4% today. Yeah, the banks. Look at these banks. Bank of America right now up 3%. JP Morgan. Let's pull up these equities. All right, the banks came in decent, but disappointed expectations, and just like that, we're coming back for the highs, and those are all-time highs. JP Morgan up by 4% today. Bank of America within $1 of all-time highs, up by 3% today. Citi up by 5.4%, my goodness, and Wells Fargo up by 3%. Jump over the airlines. Delta, look at this, up by 7.5%. Yeah, we get in and close that. Look at this run in the... Wow, American up 7.7 right now. United up by almost 10% right now. Is JetBlue participating? It is, up by 5.7%. Crude sitting at 63.35 right now. All right, we talk a little Netflix. Quite the pullback on Netflix shares. This is a one-way trip, man. Careful of stepping in front of this equity, folks. That's what you mean about waiting for a sign of strength? All right, at this point, you're just guessing. $2021 highs, just hanging out there. Just like Amazon. You're only $10 away, down from 134 to 81. And so, yeah, the Justice Department, they're looking into the bid for Warner Brothers. And the headline here is that it casts a wide net on Netflix's business practices in a merger probe, and it should. Okay, because hard to understand how these two behemoths combining is not anti-competitive in one degree. They are the number one and the number 3 streamers. The number 2 streamer is Amazon. Yeah. But the Justice Department is investigating whether Netflix has engaged in anti-competitive tactics as it probes their proposed acquisition of Warner Brothers Discovery and HBO. Questioning how Netflix competes with rivals suggests the department's looking at whether its planned Warner Brothers deal could entrench its market power or lead to a monopoly in the future. U.S. law gives enforcers broad power to oppose mergers that could lead to a monopoly, it says, as it should. That's why we regulate utilities, folks. They have to be a monopoly. So we regulate them. You don't regulate a monopoly, I think we all know what happens. Describe any other exclusionary conduct on the part of Netflix that would reasonably appear capable of entrenching market or monopoly power, the agency asked in a subpoena. They're also reviewing Paramount's proposed acquisition. And yeah, it's in the early stage. This could take years. Scrutinizing whether Netflix has unfairly hobbled rivals could give the Justice Department another legal argument against the Warner acquisition. The line of questioning also could give the department a broader window into how Netflix does business. They're opening that door, but they think it's worth it, man. They are coming for Warner Brothers Discovery. 27.21 right now. That equity backing off a bit after the hysteria for the competing calmed down, and Paramount just not stopping as well, man. Right back to these lows. Paramount 10.47, and hey, on a longer term basis, folks, I think there's a lot of upside value on there. Pretty remarkable. This is what you talk about, though. Can always go faster and further than you think in the market, folks. Okay, you know, you're up at $20, right? You say to yourself, you know, I'm well aware that we might give back some of this run from 10 to 20. But in your head, you never think you're going to be back to $10, and you don't think you're going to be back to $10 in a few months. And that's how quickly this market can do it. Okay, so just be quick in this market. We're seeing it today, yesterday. So, the housing stocks. And, they're not getting decimated today, but not the news you want to hear. I've been talking about Lennar. Okay, I like the action on Lennar recently. But now, that spike right there, that volume right there, and hey, we're back at 114. We were trading at 114.45 this morning. Okay, so the market in terms of pricing in. But yeah, the White House explores opening antitrust probe on home builders in terms of price fixing. We'll see what they find. Okay, one potential focus is on how information shared through an industry trade group. Officials have grown concerned that the trade group, whose members include Lennar, D.R. Horton, could be used to restrict housing supply or coordinate pricing. I'll tell you, folks, there's a lot of decent affordable houses out here in Polk County, Florida. And the subsidies, right, the way they're subsidizing the rates, okay? And the thing that's so tough about that is that, yes, they control vast supply, but you're always competing against other houses in the market. So, yeah, I'd like to make sure that they're operating on the up and up and that they're not colluding. But in reality, that's not the answer. Maybe it's a component. But yeah, you get the home builders index lower. And we'll see. But of course, you have Trump homes out there. So we got Lennar trading off 1.2% right now. D.R. Horton off 1.3%. You see the move there. KB Homes off about 0.9% right now. We check back in on Amazon, down about $14. And NVIDIA, my goodness, just continuing higher, up by 8%. You're adding $350 billion in market cap today alone. Today alone. We check back in on crypto. The market taking a big breath of relief right now. That's crypto back above 70,000. We got the VIX at 1770. We check in on the dollar, trading at 97.62. And the 10-year right now, 112.04. We're sitting at about 4.22%. All right, folks, markets marching higher, coming into the close. We got 20 minutes left to go in trading. S&P's up 190 points from the lows last night. We'll come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. And yeah, look at this market. We are right now. He just got a little acceleration higher on that last leg. And right now, folks, look at this move. We're trading. He just got 10 points. 10 points looks like nothing on a day like today where you're up almost 200 from the lows. S&P's right now up 1.9%. The Russell's up 3.6%. The Dow hits 50,000 for the first time ever. And you got metals saving themselves a bit. I think we're going to see some continued volatility in both directions, folks. Okay, these types of weeks where you can have one of these AI models just introduce the slightest new tool and an industry crashes. And I'm exaggerating, right? The software industry, but boy, these types of pullbacks, okay? The weak Anthropic tanked the market and pulled ahead of its rivals. Is it really ahead of its rivals? Once a distant second or third, the company's moving to the front with a focus on caution, coding, and business clients, and on a Super Bowl ad mocking ads coming to ChatGPT. Yeah, and just talking about their advanced model yet, capable of synthesizing data analysis, running teams of coding assistants, and functions akin to product management. And that hit the market, man. And look at this move. They released that tool, and within 24 hours, kaboom. Right? Adobe, Workday, Salesforce, Intuit, Monday.com. Look at Salesforce, Intuit. It makes sense. Some of these software functions, pretty simple from a programmatic standpoint when you look at something like your taxes, accounting, coding. We're seeing what it can do for coding. Pretty amazing where the world can go in 4 or 5 years, right? Founded after COVID. A Google researcher, the founder, left OpenAI with a feud after a feud with Altman. Altman really should have kept this gentleman there. And I say that kiddingly, but kidding. Anthropic maintains a focus on safety that's often credited as a primary reason it initially fell behind OpenAI. And yeah, you're going to hear more about it, man. Anthropic's models made up nearly 80% of the market in January. Look at this. Data from expense management startup Ramp shows that Anthropic in January dominated the so-called API spending, which occurs when users access an AI model through a third-party service. 80% of the market. No wonder OpenAI is trying to push this out to the public, man. They need more money, and competition is coming. OpenAI, which initially focused mainly on consumers, remains the top OpenAI company in terms of users. 900 million monthly active users. More than the combined total from Google's Gemini, Anthropic's Claude, AI's Grok, and DeepSeek and Alibaba. But I tell you something, folks. I use ChatGPT all the time. And I'm ready to explore some of the options that are out there, because the flattery and the nonsense that it spits back to you with way too much confidence is a dramatic problem. That if you play around with those enough, you know them. They'll tell you something in one heartbeat, and then you tell it why it's wrong, and then they'll tell you immediately, you're right, it's wrong. Then why didn't you get that the first time? And they're going to be amazing at certain tasks. Right? But it just points to the level of competition and how there's just an extreme opening for other services. And if you start becoming the best service, you're going to get everybody over there. You're seeing some of those volatilities take place today. Microsoft up 1.8%, but they all need NVIDIA chips, up by $14, up 8.4%. Look at this thing, man. Broadcom up by 7.5% right now. Take a look at yields. It's been quite a move to lower price, higher yield. We got a new Fed chair. We'll see if yesterday was a change of tone. We're giving back some of that today. But you're talking about a 10-year at about 4.21 right now. And when we talk about the cuts this market's pricing in, you talk about a change of tone. We've pulled back a bit. Look how quickly you change, right? A month ago, the odds of a cut at their next meeting, 41%. A week ago, 13%. A day ago, 23%. Today, 18%. Just shows you the type of volatility that's going to be coming down the line, folks. This is not going to change, even when we get a new Fed chair. Okay, we got March and April left with Powell. June 17th. Put it on your calendar. June 17th. Likely the first meeting with Mr. Warsh. If he can get confirmed, and hopefully he can. Because the only reason he can't is if the nonsense with Powell keeps continuing and holds up Warsh's nomination for some reason. All right. Silver's decent, the volume spike, but nothing like the way up. And, you look at some of these equities. Look at this. I could just go down the line. Any equity, I bet. Look at this. It's just light volume across the board right now on this bid. Okay, the buyers may have slowed right now, folks, but the sellers may have slowed, right? But you do not have resounding buying coming back into this market right now. We were looking at Wheaton Precious earlier, right? Look at this volume, man. Nothing compared to the average daily volume on a bounce like today. No matter what you pick, I'm just jumping around to the equities I talk about in the gold report. Huge moves. Vista up by 8%. Looking to be the lowest volume day we've had in a couple weeks since we've had this volatility. Kinross. This has been one of the strongest ones, folks. Look at this thing. Look at this run, man. From $5 up to 40 over 2 years. What's worrisome here is the last time you had volume was at $25. Okay? And all that is a 382 pullback. I don't think we're done on this gold pullback yet, folks. Be careful. And don't get over your skis. There's a lot of great trades out there when we're getting the bounces that we're getting. But we don't quite have that volume just yet. On a weekly basis, decent volume on gold. Okay, but these other metals, not quite the bounce you'd want to see. Silver continuing lower. And that's only 2 weeks down. All right, folks. The market's not stopping. Look at this. S&Ps. We might be at 7,000 in the futures by the time we hit it. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got quite a day going on in the markets, man. You are not stopping. The S&Ps are up 2.1% right now. We've engulfed what we've done yesterday and the day prior, which is just remarkable. Be good if we could get a little bit more volume, though. We're at 1.55 right now. The last 3 days, you were coming in at about 1.9. 1.5 still a big day, though. This isn't like gold, right? You look at gold, you're way off. Gold's, a lot of the equities in the gold market, you're bouncing on one of the lightest volume days of the year. S&Ps, it's not the case, man. Okay? Not even close. NASDAQ right now, you engulf the prior day as well. Not quite the same level of volume, but it's a decent day. Not competing with what we've done on the downside, though, still. The Dow right now, volume-wise, look at this volume on the Dow. The Dow, folks, is engulfing everything we've done all year with volume on a daily basis. Okay? You jump over the weekly. How's that? You take it all out with volume. And you check out that trend. The Dow right now, pretty remarkable. You're doing it in a day. And look at this channel you're in. You've been in a very well-defined channel since about August in the Dow, and you still have ways to go. The top of that channel, about 51,000 in the Dow right now. You're doing it with volume. And then the Russell. You'll probably get there with volume by the end of the day. The Russell, you take out everything you did over, what, the last couple weeks? You put it on a weekly? Yeah, you take out the last couple weeks on the Russell, and you're doing it with volume as well. All right, let's check out the volume on Bitcoin. saving yourself a bit, but you're opening, okay? You're in this consolidation from 2024. You traded lower, you did it on volume, and you're going to finish. Yeah, the lows of the April pullback were 74,000. So on a weekly basis, you trade below that, you close below that. We close this gap, and you're doing it on volume. All right, gold up by 1.8%, S&P's up by 2%. And how about those chip stocks? Nvidia up by $14, almost $350 billion in market cap. We got a volatile market, folks. Okay, don't get married to positions. We're going to have plenty of opportunities. Get a plan, stick to it. Folks, there's always another trade, right? Have a great weekend, a safe weekend. Thanks for being here, folks.